China embarking on its biggest push yet, the ruling Communist Party's highest decision-making body vowing to deploy what it calls necessary fiscal spending. This in an effort to reach a growth target of around 5% this year. President Xi Jinping leading calls for calm in handling current economic challenges. State media reporting the Chinese leader warning against inertia and urging officials to adopt a sense of responsibility and urgency. Leaders also pledging to arrest persistent decline in the property sector by ramping up so-called white list loans targeting unfinished housing projects. Experts say there is hope yet for a revival of the property market.
The market is already used to the fact that the demand is going to be weak and the inventory is going to remain high. And all we need to see is a bit of an uptick in either the real estate sales or real estate price, or even flattening. So it's just for context, Chinese real estate market has been going through an extended period of decline. This year, we have 9 consecutive months of declines, and not including the previous year's declines. So the expectation is extremely low.
CNA's Olivia Siong joins us with more from Beijing. Olivia, generally, politburo meetings in September do not look at the economy. The fact that this one has done so, what does that signal?
Wei Su, this is being viewed as the clearest and strongest signal that the Chinese leadership plans to be more forceful in trying to turn around its slowing economy. Also, acknowledgement perhaps of some of the frustration over previous support measures that had been announced that were piecemeal but didn't really move the needle that much. The fact that this month's meeting comes at a time focusing on the economy, typically not such a meeting doesn't happen at this time of the year, and the different kind of language that's being used in the report on this high-level meeting signaling a shift from the Chinese leadership. Now, unlike other politburo meetings where we see more general statements, in this state media report, we are seeing specific commitments. For example, one China-based analyst I spoke to pointed out how the state media report talked about a need to ensure necessary fiscal expenditures. And this is a change from the previous recent meetings where the language used was to effectively implement a proactive fiscal policy, signaling a greater intention for more aggressive fiscal spending for the rest of the year. Although just how much, though, still remains to be seen. Now, this also follows a slew of monetary policy stimulus measures that had been announced earlier this week, from cutting key rates to now also reports that the government is looking to put in over $140 billion worth of money to rebuild state-run banks. From the meeting, Chinese leaders also seeking to project confidence in China's economic trajectory, although acknowledging that there are new problems that need to be tackled. Wei Su.
Olivia, as you mentioned, more specifics and details from Chinese leaders on things such as employment as well. Measures also announced to address that particular issue. How radical are these measures?
Wei Su, quite a few unusual moves, rare moves that have been announced. We know that unemployment has been a key issue here in China. And in that report from the meeting, we saw a line which saw the leadership pledge to strengthen assistance for vulnerable groups like the elderly and those that have been unemployed for a long period of time, including strengthening support for low-income groups. Now, yesterday, we saw the government announce a rare one-off cash payout to disadvantaged groups, although we don't know exactly how much will be given out. But what has been said is that these payouts should be made by October 1st, which is when China marks the 75th anniversary of the founding of the People's Republic of China, a key date and milestone. And it's also a time where typically spending goes up, and analysts say that the low-income groups will likely want to spend on essential potentials and also perhaps acknowledgement of people's anxiety over China's current economic situation as well. The big question also is for economic growth. Can China meet its target of around 5% growth for this year? Analysts say with this whole slew of measures, some think it's a bit too late, while others say that target may still be in reach. At least it puts China a bit closer to reaching that target. Wei Su.
Certainly gives greater confidence that it might in fact reach that target. CNA's Olivia Siong live from Beijing. Are these latest developments fueling more gains in greater Chinese equities? The aggressive stimulus already going some way in that direction earlier this week. Shanghai adding 3.6% to close at its highest since June. Shenzhen adding more than 4.4%. And the Hang Seng hitting a 14-month high within reach of the key 20,000 mark. The onshore yuan ending the domestic session at 7.012 against the greenback. That's its strongest in 16 months. Market watchers remaining upbeat that the recent rally still has further potential for upside.